Greetings, Dr. Jeffrey Scott here. This is going to be a short video for my Market MRI Pro update, at least shorter than the last several have been. Markets consolidated today, right around the 200-day SMA. Is this beginning of some healthy consolidation before the next leg higher, or something worse? Best email today is marketmripro@gmail.com. I still get hgsidoc@gmail.com, and even better, join my Google group called Top Down Trader. As always, these are for educational purposes only. Anything I talk about should be taken in the spirit of education, not investment advice. The intent of the video is to demonstrate the tools of top-down analysis and how I apply them. Trading involves risk. You're solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned in this report. Trading stocks and options should be considered risky and should always consult with your financial advisors before making trades. And I have tools in multiple platforms. We'll be using Market MRI Pro once again tonight. I got to take this 300 out. Orange County meeting, less than a month away. I can't wait. I'm booked. Looking forward to it. Got a great cast of speakers. Active trading, not day trading. Active swing trading is probably where most of these fall. But I think you'll find these to be great teachers. Lots of knowledge to share and some good tools. Greg Mills at gam72054@aol.com is the contact person. He'll give you an update on whether or not we have any more live in the room seats available. They always free up near the end with a couple of more slots when people who are in the room have conflicts and decide to do it on the internet. So if you want to be in the room, there's still an option, but if not, we'll be on the internet, and we share the videos and at least my PowerPoint presentations with all paid attendees, whether live or on the internet. Top Down Trader is the name of my Google group. I post these there on a regular basis. I'll comment during the day when I think there's something there. And if I'm going to have any educational seminars that I do from time to time every month or two, I usually invite them first and then fill it up via YouTube if I don't meet my attendance expectation. Know your news and earnings. There's risk on Thursday morning. We have jobless claims, we got PPI, we got manufacturing, and then we got, even before the market opens, we got Powell speaking. Then we got industrial production, capacity, business inventories, and then we have another Fed head in the afternoon. From an earnings perspective, on Thursday, you could see Walmart before the market opens, John Deere, after hours, Kava, nice fast food. We'll see how the stock does. And we've got, what was the other one? Applied Materials, Doximity, and still a lot to go on this week. After hours with earnings, pulling that up right now, CoreWeave actually gave up 6.5%. This is their first public reporting. Cisco was up. Big mover is Foot Locker, with rumors that Dick's Sporting Goods is looking to buy them. So we'll see what happens. As I say down here, it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. So in the Market MRI Pro, generally the indexes were up. The Qs were up 0.6, the Spiders 0.13, at least half were up. Diamond's down 0.24 and the Russell was down 0.89. So mixed on the indices. The VIX was up 2%. The Bitcoin was down 1.5% as well, and the dollar was up a bit. I think the big tell to me is when I look over here at my three indexes with broken out by sector performance. Blue is today, gray yesterday. Only 25% of the S&P 1500 are up, 34% of the NASDAQ, and 30% of the NYSE. So even though the indexes were mixed, the average stock was down. So that tells you it was a soft day in the market, and one that you probably, if you're very long, you probably had better days earlier in the week. If we look at performance of the S&P sectors, you could see all of them were down on the day. Again, leading to the idea that this was a negative session, and healthcare was the big loser, down 2.65%. And if we look at the new high, new lows, the NYSE remains positive, but the NASDAQ drifted back to the negative. When I look at the buckets, you can see a big shift to the left. So this is a weakening from what was perhaps overbought 2 sessions ago. Um, Even yesterday, the NYSE had 18% of the stocks above the Bollinger Bands. S&P 1500 had 19, 15 on the NASDAQ, and 18 on the Russell 2000. After Tuesday, it was kind of double that. So the market got a little stretched. A little consolidation can be helpful. We are neither extended to the upside nor the downside by this picture. Looking at market breadth, you could see sort of a low close doji if you follow John Person on the NYSE. That's a bearish looking pattern. But, it is what it is. It could be just 2 days down and we rally. Still a very strong day on the NASDAQ on the composite. Interesting. All right. If we look at the stocks above the 20, 50, and 200, it's starting to turn down after getting to a level that I mentioned was a little bit excessive. If we look at new high, new lows, as we already looked at, negative on the NYSE, positive on the NASDAQ, and then the AD line negative on both, and interestingly, up-down was positive on the NASDAQ, but negative on the NYSE, and no new signals occurred on the bottom. If we go into the timing brief, no change. The dailies all are in a buy as we've broken above the 30-period WMA and the bongo is blue. You can see the buy-sell line is on the bottom. You can visually look at the accuracy of my timing model. If you look at the weekly, which is a longer time frame and the one that's really dictates my main direction, and give it a second for the weekly to pop up. There you go. You can see the weekly has turned positive this week on the spiders and the Qs. That's a big deal to me. We have broken we had a bongo turn blue on the Russell, but we have to close above the WMA, and we're almost there. I don't think we're going to get it this week on the diamond. So the change here is it looks better on the weekly than it did over the last many weeks. You could see how many weeks we were in a sell signal. The other thing to consider, though, is it's Wednesday night. You got 2 more trading days. And the new buy signals, they don't count until the market closes on Friday. So I've been thinking we've been in a retracement and a downtrend. If that green buy signal holds on the Qs and the spiders, I have to open my mind that this could be a new uptrend. And maybe we do make an assault onto new highs. Just not there yet. It's possible. And if you've been listening to me, I'm pretty transparent about what I've done. I took some profit today. I had a in the money bull call spread that was very wide on SE. That's due to expire on Friday. And I gave up just a little bit to close it early. I took some profits on Hood. With Bitcoin down and that El Toro coming to market, I was a little bit concerned about that. I got a few more profits I'll probably take tomorrow, Thursday. But we'll see what the PPI does and we'll see what Powell has to say, because that'll happen before I can make any more changes in my portfolio. And don't forget, it seems early, but options expiration is this Friday. U.S. index ETFs. The good news is spiders have broken above the 200. As I mentioned before, the spiders were relatively flat today, 0.13% move, but holding above the 200. The Qs a little bit nicer looking candle there, and they were up 0.6. The diamonds went right into that 200 and have failed, but it really hasn't broken down. It was down again in the market, but it was down 0.24, very small down. The Russell never made it to the 200. It kind of looks a little bit like the diamonds. Is it rolling over? Too early to say, but the Russell was down 0.89. VIX, which has fallen down to where it was before the recent volatility came into the market, was up 2%, but still very low. And the dollar rallied a bit, opened lower but closed higher, up 0.22. If we look at commodities in the market on Wednesday, gold is pulling down to the 50, getting kind of gappy here after all-time highs, down 2%. Silver, similar pattern, although broken the 50, down 2.2. The dollar is the U.S. oil is stalling at the 50 period moving average, was down a little bit over 1% today. And natural gas didn't even make it to the 50 before failing. We'll see if it holds at the 17, but I get the feeling it's going to come down and test the 200, so I wouldn't be long natural gas here. Why is it not good? There it is, down 4%. Yields were up, and I think perhaps that's kind of what scared the market. You could see the 10-year was up again, 0.62. The 30-year was up 0.55, and they closed at 4.5% and almost 5%. So that could be a dampen. Maybe we get a soft PPI, and people think cuts are back on and the rates come down. But right now, I think those rates are potentially concerning some of the market participants. If we look at where the market is moving, what's working, you can see Bitcoin weakened. Communications, which has recently fallen, picked up a little bit. Discretionary has been leading. Defensive things like staples, utilities, real estate, and healthcare have been lagging. And technology, boy, look at NVIDIA on its way up after being left for dead. And I guess didn't hurt that major purchases of chips from Middle Eastern countries. But you could see tech and discretionary are still where it's at, and communication has turned up. If I go into the JAS layout, this is how I do my prospecting. And I'm going to do it quickly. I already picked a couple of stocks that I'm interested that I'll show you. First thing is, let's just look at the top down, and we could see the leading sectors. Now, this will be different than the S&P 500 because I've loaded it up with 3,400 stocks, 3,500 stocks. So these are the top three sectors. It gives you 762 stocks. Let's look at the top 10 or so. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. And from a top-down analysis, I could come in here and let's get rid of the small stocks. Small volume, less than 500K, less than $5 gone. Leaves us 165 stocks. Let's just rank them this time by one-day move, and we can go through. NEGG, new eggs, don't know what happened with them. You wonder if they didn't have an earnings blowout. And nope, must have been a news item. Haven't seen earnings forever in Newegg. Is Newegg potentially an IPO? Don't know what this is. I know what Newegg is. Sometimes there's ticker issues. Let's see if there's any news on Newegg. Exclusive availability of new server CPUs. All right. And they had results in April. So maybe that's what's driving it. Probably not anything that interests me. TME, Tencent Music Enterprises. This is a Chinese stock, and I kind of like what this looks like. It's kind of been consolidating, broke out here. Look at the big move in relative strength in OBV, a CPR dot, gap, volume, breakout, momentum. The only problem is it looks like it's getting extended. Now, I might be willing to chase this one because it's extended after going sideways forever, which means the high jump is it sort of exaggerates when you come out of a long sideways move. So you can almost see a cup and a handle and a breakout here. TME looks interesting. Reddit, this was one that was doing great for quite some time. Ran all the way up here, up to 230-ish, and then it had a pretty hard breakdown. little bit of consolidation, not very long, but today broke out with massive volume. Again, is this an earnings play? 501, no. Something else must have happened. Let's see if there's any news. Quarterly guidance implies nearly 50% growth was a Kramer story. Okay, good or not. But that's pretty impressive. So Reddit looks interesting here. Again, it doesn't have a high jump because it's a recent IPO. It doesn't have enough data. You can see relative strength here popping above the moving average, as is OBV. I like that candle breakout momentum. That looks fine. TDUP. Thread up. Don't know anything about it. Um, kind of extended, but a nice breakout, a flag, and another move. Cheap stock. BYON, Beyond Meat. I guess the old Beyond Meat, not that exciting. Wingstop. Um, I'd rather see it break above the 200. Run. Now, it's been interesting looking at the solar stocks. Some have done better than others. First Solar has really been my favorite. Run, a breakout here. You can see the preponderance of the blue dots, the relative strength, the OBV, and it's not too extended to buy. And just to show you where First Solar is, and I had looked at it today, but let's see where First Solar. First Solar has broken above the 200. We had looked at Enphase and Solar Edge, and we saw that they'd failed here. Solar Edge failed a little higher, but clearly Run and First Solar look good. One of the stocks that I took some profits on was CSE. This has had a really nice run. It's pretty compressed here but it came out, missed revenue, but turned positive on profits and gapped up and had another nice session. This is one that I was in since about 90. In fact, I sat at dinner with in the 90s, probably in this area here, and somebody who's on my board asked me, well, what's my stock of the year? And I said, I hate doing that, but I think SE. So I took profits at 145 before, and I bought back into it. But you could see a nice breakout here. I'm going to probably watch that for a little pullback to re-enter. I'm already having FOMO because my position ended. LEU's been showing up a lot lately. Centrus Energy, a little bit of a pullback here, but this one also looked interesting. And look at, it makes money. It's had some big surprises. Just its numbers are all over the place. All right, so that's a top-down approach. I found several things that look good. Sometimes I'd rather look at a bottoms up. Here's my, after the 500,000 shares and $5, I have 1,943 stocks in my universe. One thing I like to do is I go to pullbacks and uptrend, which identifies specific pattern, and then I'll just rank it by the number of up dots and just look at what comes up to the top. Small pharmaceutical, don't know it. This is one that I was impressed by. Exelixis is a company that I never understood why the stock has never done much. They have a great drug, and you could see, but when I say never did much, um, this is the price here, and there's got to be a way to spread it out. Let's look at the weekly. But you can see it's basically been in the 20s forever, and then only recently it started breaking out. They have a great drug on the market. They've combined it with a lot of other drugs. I am a cancer doctor. They have a great drug on the market. Finally, they're getting some credit for it. I wonder if something else is going on with them. Let's go back to the daily. But that's after a very long base. That's a pretty impressive breakout. Now, it is extended. It had a big move here. You could see on the 13th, 62 cents, up 264%. We're projecting 55, 1, 2, 3, 4 versus 77. That's not so good. You could see they also had positive revenue movement. I would hope to see it pull back some, but I do like Exelixis, and that was one of the ones that I liked. let's see, SMCI looks like it might be getting ready to move. SMCI, and I always look up here because it tells me when the last earnings were, when the next earnings were. This is a company that stubbed its toes with some concerns of fraud that it basically has not been convicted of and is from some short sellers. This one looks interesting as well. And let me just show you two of the stocks that I liked, a couple that I liked, and cut this short at 20 minutes. Is Rocket Lab, RKLB. Not usually the type of company that I'm interested in, but kind of like that Exelixis sideways for quite some time. Let me see if I can spread this out a little bit. What I liked about it is ran up, pullback, sideways move, and let's look at the weekly. You can see the weekly pullback and breaking out. Let's go back to the daily, and I wish I could just make this feel bigger. We're playing with different ways to expand, let you make the chart look bigger. And for whatever reason, I'm struggling with this one. But it is breaking out here. Let's look down here. Good volume, a CPR signal, volume breakout momentum, relative strength crossing up OBV. RKLB look good. And I've been interested in adding some more foreign exposure. And I've been looking at a lot of foreign banks, and CIB looked interesting today. And run up here, sideways consolidation, and a breakout. Now, I'd want this breakout to continue, and I wouldn't buy it unless it traded above the high of the session. And again, this isn't investment advice. It's how I approach the market. If you want investment advice, call your financial advisor. But this is an interesting little consolidation here. One, two, third time it broke out. CIB, Bank of Colombia. Have an awesome day in the market. It wouldn't surprise me to see some volatility, sideways movement for a while be okay. I'd be happy if we break out and go to new highs, but I think we may have a little bit of caution ahead. Take care, everybody.